What's up, everybody? For today's topic, I'm going to discuss why I believe, 5 reasons why I believe 95% of people fail in the Forex. And today's topic is one that's been gone over millions of times in millions of places. You can just go to DuckDuckGo, type in why 95% of Forex traders lose. You'll see it everywhere. Now, not everybody agrees on all the same reasons. There's a few reasons that everybody tends to agree on, but today I'm going to discuss my 5 reasons that I believe is causing folks who try to join this business why they fail. And I think we should start with that number 1, Forex is a business. Period. Forex is a business. In Forex, you are in the business of buying and selling international currencies for a profit. You buy one low, you sell one high at the same time. That's what you're hoping. When you close the trade, you are selling them and buying them back for a profit. Hopefully. That's what your business is. That's what you do. Now, your product, in order to get those results, is your cash, the money that you put into your trading account, which is why you have to take care of that cash, which we'll talk about later. But also, as with any business, and 95% of all businesses lose, not just Forex, but anybody, restaurants, anything, within the first 5 years, there's a better like around 90 to 95% chance that they're going to fail. Lots of businesses fail each year. Trading Forex is no exception. But as with any business, you need to make sure you prepare yourself for success. And that includes things like have a business plan, like a trading strategy or a methodology. Know your money management. Where's your stops and your take profits going to be? How much are you going to risk per trade? What are you going to trade? How are you going to trade it? What time frames? What pairs? Basically, you need to know what you're doing before you walk in. It can't be a guess. It has to be something. Before you use real money, you have to have all these things lined up. Once you have the majority of this lined up, you're ready to go. As long as you've done your demo testing and you understand how your system works. I don't consider a system graduated until it's been live for a while, 3 to 6 months. I like to cover at least 6 months. I don't consider it. I consider it viable if it makes money based on back testing for several years and forward testing on demo for 3 months at least. Then you go live, very little bit, like whatever, pennies, nickels, dimes, and make sure that it still works in the live market, because the live market is different, both psychologically and how it works in general, which we'll talk about. That's another reason. We'll go down there later. But all these things are very important. Trading Forex is not a get-rich-quick scheme. It's a get-rich eventually, or get-rich slow over time, building equity kind of a way to do it. It's definitely not gambling, although some people will argue it is. But if that's the case, then so is investing in stocks and bonds, mutual funds, and any other thing that you do. Life's a gamble. So it just depends on your school of thought and what you think. But by gambling, I mean it's not going in with any foresight. You're taking just a chance with no knowledge. When you play blackjack, you know how the game works, but it's all chance. Forex is chance, but it's educated. I like to call it swag, S-W-A-G, scientific wild-ass guess. You have better odds of making money in the long term if you come in prepared in Forex. In gambling, in the long term, you will lose. It's built into the system. Okay? So have a business plan. Make sure that your trading strategy works. Make sure your money management scheme works. By testing your theories out on the demo accounts. That's what demo accounts are for. Demo accounts are not there for you to be on for years and years and years. It's there to test your theory, see if it works, then you go live, and then you graduate live, and then you can start trading for higher amounts. Okay? Now, number 2 is learn to control your emotions, especially pride. Now, this is a strange one. Having to control your emotions in a market ruled by emotions. Let me explain. The market itself is basically everyone who trades any market, businesses, companies, governments, regular retail people like us. That's everybody trading, but they're trading on what they believe is going to happen. And as humans, it's all based on fear and emotion. Yes, there's some logic in there, but that's how the market works, right? When people get scared, they sell. When they're confident, they buy. Now, the most common things you'll run into trading Forex is fear, greed, anger, and pride. Those are the 3 most common ones. Fear is going to be fear of losing, fear of embarrassing yourself, fear of pulling the trigger, fear of closing the trade, fear of, losing money. Those are all common fears that every trader feels. Even me, all the time. Everybody does. It doesn't go away. You just learn to control it. Greed, obviously. It's greed. But that greed is a killer. If you make a good trade, you may think, oh, I want to get some more. Or you want to carve out more out of the trade. You can't do that. Plan your trade, trade your plan. If your plan, like my methodology, part of it, is to grab the meaty chunks of moves. Okay, now I get in and out a lot of little trades that lose. And I try to grab big chunks from when it does go, right? That's the way I trade. If you visit my website at bearforex.com, you'll see I have my results are posted there for the last several years. And if you follow me on Patreon, by the time this video comes out, who knows if there'll be anyone on there. But if you follow me on Patreon, you'll see I post trades every day and every week. So you'll see what and how I do. But you'll see I still get angry. The pride thing is gone. I'm proud of myself, but I'm not prideful to the point where I'm gonna argue the point against someone. Like you see it all, what you see on the Forex forums, for example. Forex Factory is full of them. A guy will come in, he'll have a plan, and another guy will come in and say, "Oh, you can't do it that way because I say da 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 da," and then they start bickering. It's all ridiculous. If you lose, tell people you lose. It's everybody loses. If you don't lose, you're lying. So you're a liar if you don't lose. Everybody loses. You have to. It's a zero-sum game. For me to win, I had to take money from someone. That's the way Forex works. It's actually kind of gangsta if you think about it. But yeah, so that's just the way it works. So with anger, people get mad at they lost an opportunity, or they get mad because they lost money, or they got mad because they closed too early, or they get mad because the news didn't go their way. They get mad because they got stopped out. They got mad. It's okay to get frustrated about something. I mean, again, we're human. It's very hard to you can't turn off these emotions, but you must learn to control them. You have to. Because if you get mad at every little thing, you're never going to be focused to do the right thing. It either works or it doesn't work in this business. Okay? You execute a trade. You either make money or you lose money. There's only two. That's it. As long as, if you're going in confident, though, you shouldn't have any fear. You shouldn't have any greed. Oh, greed is always going to be there, but you shouldn't get angry. And only be proud of yourself that you accomplished something. I should say pride is not probably the wrong word. Conceited is probably more like it, because you should be proud of yourself if you come up with your own system or even follow someone, and but you're able to make money because you can control your greed. Because I mean, honest to God, is you guys, I could tell you exactly what I'm doing every trade, every time, and you're still going to not get my results. Because you're not going to do exactly what I did. You're not. You're going to get scared if you don't know how to control your emotions. You're going to close early or get in late. Everything's different. Everyone's different. One of my mentors used to say I could get 4 guys and give them all the same charts and same tools and tell them how to trade, and each one is going to come back with different results. And he used to do that, and he used to show me. And it's true. Everybody was different. He told them what to do exactly, and it still came back. Why? Because everybody's different. Everybody has a different level of risk tolerance and fear, and anger, and pride. Hey, I want to make him proud of me, which, who cares? I don't want nobody to be proud of me. I want my bank account to grow. All right? So try to control your emotions. It takes time to learn it, but the easiest way to do that is to go live, small, and then grow it over time to control your emotions. Because, well, we'll talk about that part later, and I'll tell you. Well, actually, next. We'll talk about it right now. Number 3, why people lose. They never go live fast enough. Now, I know. I'm going to get some shit for this, but I don't care. It's the truth, and people need to hear this. And whether everybody believes it or not, just shut up and listen. I always hear demo trade, demo. And I couldn't agree more. However, people will demo to death. Paralysis by analysis. Demo accounts are simply there for you to try out a theory, to test it out, to back test, forward test without risking money to see if it's something that's viable. Okay? And this process should take between 3 and 6 months. That's why people spend decades before they never trade, because they'll come up with something and they'll test it and they'll forward test it and then it won't work, or it will work but they cheated themselves while they were forward testing. Then they go live and they start doing big money, and then all the emotions come, and then oh shit, it's failing. It doesn't work because I lost 2 in a row or 3 in a row. And there's your fear, ding, ding, ding. There's your fear coming in, or your anger. But the truth is, once you have something that's viable, go live. Go live. Okay? Deposit a few $100s. It's a business. Consider it as like educating yourself in school. People waste $50,000 on garbage master's degrees that aren't worth crap. I'm sorry. You know, I'll talk about college in a different video, but generally speaking, your college degree is not worth anything. Each year, more people graduate with bachelor's degrees. It means bachelor's degrees are useless more and more. Now it has to be master's. But more and more people are getting master's degrees. So now those are going to be useless. And you got some fools like Bernie and AOC and all them idiots who want to make everything free. You'll never get a job. School won't matter anymore. So make sure, let me get off that tirade, and let me make sure that you understand something. You need to go live because of 2 reasons. 1, the live market is different than demo. You actually get charged the real interest. You actually pay the real spread. The news results affect it differently. But the most important thing is the psychological difference between trading demo and trading live. And there is a huge difference. I don't care if you're trading pennies, it feels different. Because you can't just reset and put that money back. If it's gone, it's gone. And that is the part where people that I talk to, failed students, failed traders, that's the part that kills them the most. That transition from demo to live. Because they build all this confidence in demo, and then they go live and they max out whatever they're going to trade. Like let's say they got 10 grand in their account. They're going to go trade $1 a point. Okay, and then all of a sudden they start losing. Or, hey, my plan is not working. Hey, this money management. Oh, shit, did I do curve fitting? If you guys know what that is. When you're back testing and you make your results fit, subconsciously or not. Now, if they had just started with pennies or dimes and built their way up as their confidence builds up, that would be a lot better. But don't let demo accounts fool you. Yes, if you don't make money on demo, you sure as hell ain't going to make money live. But just because you make money demo doesn't mean you will make money live. Trust me on that. That is a 100% fact. Because of that psychological difference, there is that barrier. Now it's for real. Now it's real money. If you mess up on a trade, you can't log in and redeposit it or hit reset. It doesn't work that way. So please, when you have something you believe is viable, or if you're testing out a theory, or if you're following, I don't really think you should you should just jump in. I think you should start slow. Whatever you're doing, if you have a mentor, if you're following somebody's trading advice, if you have a signal service, whatever it is, test it out on demo first, 3 months, whatever. If they give you the results, then great. Then go back and back test, see if they'll let you back test if you're following somebody. Most people won't. Most people don't, because it's a lot to keep all those records. You don't want to give everybody your records and all that stuff, so because they might figure out what you're doing and how you're making your money, and that's not fair for you. But yeah, if you're trading your own system, make sure you do a back test. If you find a trading system you enjoy to use, make sure you back test it on the demo, then forward test it on the demo. It doesn't matter how much money you have in your demo. It doesn't matter how you could pretend you have $100 million, whatever. Doesn't matter, as long as the percents come back, as long as there's wins, more wins than losses, that's what matters. Then go live with very small amounts. Right now, I don't know about other brokers, but my broker, Owanda, you can trade pennies. Okay, so if they let you trade pennies, then that's fine. Trade pennies. If you have to trade nickels or dimes, like if you must use MT4, which I don't suggest you actually execute trades through MT4, but if you have to use MT4 for whatever reason, then trading dimes is not a big deal. If you don't have enough to trade dimes, you're in the wrong business anyway. You should have a considerable amount more than that. Okay. Go live as soon as to test if the viability is true for your system. Okay, just because it works on demo doesn't mean it'll work live. Because of you, not because of the system. All right. Now, moving on to number 4. That's quick. Number 4 is education. Educating yourself is important when learning on how the business of Forex works. I mean, would you open a business like a restaurant or a lawyer's office or a mechanic without educating yourself first? Of course not. As soon as your first customer walks in and they they want a sandwich or they want a filet mignon and you have no idea how to make one, or if you're a lawyer and it comes in and he wants advice on a situation and you don't know what you're doing, I mean, come on. And I mean real education, So like real education, not college, pay millions of dollars. The very first thing you should do is go to babypips.com/school. Okay? There's a link in the description. It's a very good base for you to learn what the world of Forex is about. And they answer a lot of questions, simple questions for people. That's why I don't take those questions, because the education you can get there is pretty damn good and it's free. All right? So you can start with that. So that'll teach you the ins and outs and the basics of what Forex is and how it works. Okay? And it's absolutely free. You don't have to pay nobody for no classes. There's tons and tons of online videos for the basics of Forex, but I recommend this is the only time one of the only times you'll hear me recommend something is babypips.com/school. That is a good website to go visit. It's free and it's made by traders for traders. And I've read it multiple times in the past, and there's some good stuff in there. But also, something it doesn't teach you, and it just takes time, is learning the rhythm of the markets. So you have to study the patterns that you see for the pairs that you trade. That's important too. But that just comes with time and experience. But also, obviously, you need to study the software you're going to use and your broker. You know, I had a video about the last video was discussing the dissection of a trade. You know, in terms of how much it costs to trade and all the costs and fees associated with a trade for me, and I'm sure that's the same for most other places. So that's something else you have to learn. Right? These are all things you have to learn. Trading is not just, oh, deposit money and I'll go long, go short, go long, go short. No, no, no. It's a business and you have to treat it as such. Okay, so learning yourself also is important. Understanding what you like and what you don't like. Okay, I've traded everything from tick chart to monthly. Okay, I've traded the news of all that. And it took me years to understand I like things more slower paced myself, right? I didn't know that about me because my stress levels were through the roof when I was trading like 5 minute, 15 minute, even hourly. The stress was just so much because you constantly have to be paying attention. Oh, and the whole point of me trading Forex was I don't want to be tied to a computer for 4 to 6 hours a day, 5 days a week. That's why I like the daily charts and the 4 hour charts, because then I can go do whatever I want during the day. For dailies, you only got to be here once a day. Well, 2 times. You really should check it 2 times a day. But because I also trade the 4 hour, I usually check it about 4 or 5 times a day. So, you know, learning yourself is just as important because you have to learn what you like and what you don't like. Can you sleep with this money riding? I learned I couldn't sometimes, you know, in the past. I had to get used to going to sleep knowing I have money on the line. Of course, it goes away once you secure some pips, and then you don't have to worry you're not going to lose any money. But, yeah, so educate yourself too. You need to learn you. That's the most important thing to learn. Because anybody can, you know, like I said, you go to Baby Pips or any one of the millions of YouTube channels they have about the Forex basics. That's nothing. That's easy. That's everywhere. Learning you is the difficult part. All right? And the last one, number 5, is a twofer, but they go hand in hand, and it's what most people agree on. One of the things that most people agree on is people being undercapitalized and over trading, right? Now, what does undercapitalized means? It means you have too little money to trade with, or you're over leveraging yourself, which is why I like, since I started, other than when I was at my small stint at FXCM, then I left them like within a few years, and I've been with Awanda ever since. But even then, it was they had 100 to 1 there, and I always thought that was too much, at least for me. And I've been using 50 to 1 for forever. Even though now in America that's like the max. I've been using it for a long time, and I think that people want to get rich too fast. They want to make the money too quickly, you know. They don't understand that you have to build this over time. Forex and investing and all that, forget about the movies. Forget about Wolf of Wall Street and Soros and all that stuff. Most of us are never going to be able to do that. Those are lucky people that fell into a situation at the right time. They knew the right people and whatever. Most of the time, most of us have to build it slowly. Okay? And this is a get rich slow. This is get rich slow scheme. All right? Not get rich quick. We're trying to build an equity monster. You know, so like, for example, if you have $500 in your account and you're returning whatever, we'll say something reasonable, 10% a year, okay? And you never like put more money in, is you just stay with that 500. At the end of the year, you made $50, okay? Now what is that? That's 10%. If you have $1 million in there and you return 10%, you have $100,000 extra, right? My point is, you need to start building that account so it gets to that 100,000 or $1 million account. You're not going to start that way, because if you have $1 million, you're not going to be worried about trading. People ask me, what did I start with? I started with $1,000. My very first account had 300 in it because that was the minimum, but I blew that in like 2 months. It was gone. I had like $32 left or something. Then when I got serious, I put $1,000 in there, which is why I went to Owanda, actually, because they let me trade pennies there. So I went to Owanda and I started trading pennies there with $1,000, and I kept my job and I kept trading and I kept, I mean, there was trials and tribulations. I'm really shrinking up my history here, but basically, I turned it from one account trading the euro dollar and the pound dollar to now 3 accounts trading euro USD pairs, 7 of those, 6 Japanese yen pairs, gold, 2 kinds of oil, and the S&P 500. Yeah, it took 20 years, but hey, and you have to build your equity monster, so I'll shoot a video about transitioning out of work to trade full time, but honest to God, I think if you can just never pull money out of your account, which I wish I had done for a long time. I have my reasons, personal reasons why I had to leave work, but thankfully I was already on my way to doing Forex, so the timing just happened to be right. But if you can keep a job or another stream of income and just not touch the money in your trading account and just grow it. Don't ever pull money out except to pay taxes. Now, in America, we got to pay taxes. If we have any UK people, as far as I remember last time I checked, you guys don't have to pay taxes on your foreign exchange, spot Forex income, because it's called spread betting. And I believe that wasn't taxed. At least it didn't used to be. So, yeah, but to build your equity empire, right, you need to build it up, because it's important that later in life is when you need this money. For real, I don't know how young some of you are or how old you are. It's never too late to start, but I believe, in my opinion, that you need to have $10,000 for every $1 you trade or its equivalent. So, for example, if you had $10,000 in your trading account, each pip should be worth about $1 or whatever its equivalent. You have 50 grand in there, $5. 100 grand, $10. That is of course you can go lower. Sure, that's fine too. But I suggest that 10 grand is the minimum to have in there. So if you have 1,000, you shouldn't be trading $1. That should be 10 cents. I started with a penny, but that's because I was trying to build my confidence. After a year or so, I had a few grand in there because I was working still at that time, and I put more money in, So I had like 2 or 3 grand in there, and I was trading 30, 40 cents, Because you have to build yourself up. You have to make sure you're confident in your trading. Like I said earlier, if you can't sleep because you have a trade open, you're trading too much, and you need to lower that. Okay? So, to go over the 5 reasons I believe that are very important is, again, number 1, Forex is a business, treat it as such. Have a business plan and a trading strategy set in place. Number 2, control your emotions. Figure yourself out. Figure out what you're afraid of, and you need to try to control it as best as you can. Number 3, go live as soon as you have a viable system with the least amount your broker will let you trade, whether it's a penny, dime, nickel. I know that's going to be controversial, but trust me, it builds your confidence as a trader when you're live and you see it working live. Okay? Just do it. Number 4, education. Educate yourself about yourself. Learn you first, then learn how to trade and then learn also the software that you're going to be using. Be a master of those three things. And finally, number 5, being undercapitalized. Have enough money in your trading account. Don't overtrade. Oh, I didn't touch overtrading. Basically, you know what overtrading means. Just don't trade so much that you get burned out. Is basically overtrading. And we're going to leave it at that. I'm past my 30-minute mark. So I'm undecided on what my next topic is going to be. But look for it next week, and we'll see. So with that, I thank you all for listening. And yeah, have a good one. Study up. Check out babypips.com/school. If you guys have any questions for me, feel free to email me at bearforextrading@gmail.com. Check me out at Twitter at bearforex. You can visit my blog at bearforextrading.com. And if you're feeling like you want to give me some money, go to Patreon and check out the options you have there to support me and my channel and my crazy content. Until then, see ya.